All right, welcome back to Only Divergences. Just a quick late night update on the S&P 500, the SPY. In this video, I'm going to outline exact parameters for the S&P 500 at this time, what I'm looking for, what you should look for as well to know just what this market is going to do in the coming days and weeks. My last video on the SPY was published Friday, and I called it Bull Trap. A bull trap is where people think that a market is moving higher because of one little move, and it sucks bulls in, so they buy, but then the market falls down, thus trapping the bulls. They become underwater right after they buy, and given the move that we've had today, we now have trapped bulls. But can they be saved? Will this market find its footing and resume higher, or are we going to have more downside? Look, I don't like wasting the time of my viewers or subscribers. So to answer the question, is there more downside? I would have to say yes. But it's more complicated than that, and I intend to explain it easily for you in this quick video, and also why I think that's the case. But before we start, again, a huge thank you and welcome to the new subscribers to this unique community of smart technical analysts and confident independent investors. We just passed 100 subscribers today, so I couldn't be happier that you are all with me on this journey. I've got some plans in the works for the subscribers, but I can't reveal it just yet, but you'd want to be here when I do reveal it. And besides that, you've already seen what technical analysis can do for you in a few short weeks since you subscribed, and how it can be your ticket to true financial freedom and confidence in these markets. So let's get right to it. Today is Tuesday, September 28th, 2021. It is just after 9:35 p.m. here in beautiful Toronto. I hope you are doing well wherever you are listening to me right now. We are looking at a candlestick chart of the SPY with exponential moving averages, the MACD indicator, and the more sensitive DMI indicator, or directional movement index. We also have the ATR, or the average true range, here in blue. I'm going to be taking this out now because we don't need it for the purposes of this analysis, but I would suggest using it regularly. So I usually start off with the weekly here, but I think it's more appropriate to start off with the daily just for what I want to explain here. So first I'm going to take off the moving averages. Oops. And first let's take a look at this trend line that I've been tracking for quite some time. And I would argue a lot of technical analysts have been tracking for quite some time. Not exactly off of the low, but off of the bounce here. We see we had support here. This was election day. This was the low in March. Then we had more support and validation as this line held, but then we got closer to it, closer. And last week we tried to hold, but we fell, we broke down. And then we back tested it. We tried to back test. You can move this line a little bit here to validate that back test. But basically, a back test is when a stock breaks down below a trend line and then it goes back just to touch it, just to say, hey, how you doing? And then it continues its move lower. So as of now, unless we get a strong move higher to back test this again, which I see as very unlikely, we can basically forget about this trend line. So let's get rid of it. And let's get the moving averages back here. Put the exponential moving averages here. Good. And we can see, if we zoom in, that we are back to the 100-day moving average. See here, we're just holding it. Now, this was support last week. Well, almost support. We cut through it, but then we held. We got somewhat of a sloppy bounce here. This wasn't the best move. I publicly stated that I wasn't going long here because even for a trade, which would have been a nice trade, this just wasn't the right setup for me personally at the time, so I'm more than happy to let that go. So the real question we have to ask ourselves right now is, will this level hold? Will we get a bounce here either right away or after some consolidation, or will we move lower from here? Well, we first can ask ourselves if we have a bullish divergence on the daily or an extreme oversold that will result in a bounce. At this time, I cannot identify a bullish divergence on the daily. A bullish divergence requires a previous proximate, meaning close, low on the MACD. So this would be a bullish divergence. You can see a lower low, and then you have a low here that's higher than the previous low. See here, this would be a bullish divergence, but the better bullish divergence is something like this. You can see this low here, clear low, and then it moved up, and that's why you can see this is a lot stronger here. Right now, we don't have that here. We also don't have an extreme oversold condition, but I have to point out that objectively we are close. We can see extreme oversold as being a sharp move higher in the green indicator on the DMI, where it's also very high. So we can see here, last time we had this move up here. This would be an extreme oversold reading. We see that almost every time we got to this level, post-March 2020, we had some sort of a bounce. So you can see, let's go a little closer. So go back here, elevated green, we had a bounce. Elevated green, we had a bounce. Elevated green, bounce. Again. And we had elevated green here, and we had a bounce. So now we are at a similar high level, but we are not there yet. So we have to be careful with assuming that this is an oversold position. So to make any further determination at this stage, we have to go deeper into the hourly time frame. So a couple things to point out. Just to note that the last time that we got down to the 100-day moving average, we were very oversold, and it was a very fast move down. You can see how low we were in the MACD, right? Right now, we are not as oversold, at least on the MACD, and more importantly, at least for my analysis, the last time this happened, take a look. We had a sharp move off of the low. Remember that Monday? It was a nice, huge move. I think it started right at 3 o'clock, and we just moved higher, and the next day we gapped higher. Well, today, we had a little bit of a bounce, but it was faded right away. So this is obviously concerning. And look, right now, I can see the futures, and they are moving green, and even the VIX chart is not exactly looking like a clean setup for a move higher. In fact, it looks like it could move much lower from here, or at least chop around for a bit. But when I look at this chart right in front of me, without what I would consider strong divergence or an extreme oversold reading, I cannot at this time look at this as an optimal position to go long. I can concede that perhaps we gap higher and fade it, or the gap is enough for markets to hold support, even if it takes a couple days. I can see that, but my bias is heavily skewed towards this move coming lower before we get a real bounce. Now I acknowledge on the DMI, we have elevated green here, okay, but it's come down a little bit. You can see the difference between this elevated green and this one is this one held, and the red held, and then we had a pop. Well, the red didn't hold, it wasn't too extreme, and so when it released, it kind of gave back a little bit. So the bullish scenario would be that the green comes lower and red comes higher, similar to this situation here. But we could have a bearish scenario where the green actually continues to stay higher, and this is just a mini version of this, and we actually get a much bigger move lower. I think that's a little too much to ask from the market right now. And so while I am biased towards it moving lower, I can also favor the index just biding its time in this area here, you know, if we do get some sort of a gap. But I can't see the index exploding higher like this. I'm fine with being wrong here and being able to go back to the drawing board and see what I was not able to see before. But given how choppy this market has been, I am very biased against upside from a strict technical analysis perspective. That said, I have no positions in the SPY overnight, so I'm trying to be as unbiased as possible. So overall, I do favor the market coming down, probably with some chop, but I have a hard time seeing this move higher from here. Look, Jesse Livermore said that there's a time to go long, time to go short, and a time to go fishing. The big message that I would take away from this is that if you do not see a clear and obvious signal from the markets, go fish. Alright, thanks for sticking around until the end here. This is a late night video, so it's a little different from the other ones. Remember to like and subscribe, and I will see you tomorrow. Good luck.